Hey everybody, so we're doing another stock market overview today. And today was a pretty crazy day, and you wouldn't think it. I mean, you're looking at the SPY right now, and you just see 0.73%. You say, well, today wasn't that big of a deal. But in my opinion, it was a big deal. And I'll show you why. So we're going to flip to Apple. We're going to go on the 1-year chart. And once we get this 1-year chart up, we're going to make sure that we have our 200-day moving average set in place. So I have mine right here. It's this red line right here. You can see today we closed underneath the 200-day moving average. The 200-day moving average is right at 153.74. Now, people are going to say, well, this happened because of the news with Foxconn shutting down their factory or whatever. But, I think this was going to happen with or without that news. And you can see right here that we didn't crack underneath 150, but we came super close. So when I'm looking at Apple, what I think is the next potential area that we could find some support is quite possibly right around here at 148.43. So the reason why I say that is because I'm going to draw a trend line right here. Now let me take out the moving averages. So right around here, we can see that we catch this move right here, and that move right there, and this move right here, and that move right there. So this 148 area, I think, should have a fair amount of support. And then if we're to fall underneath that, then I'm thinking right around here at 145 should be the next area. And you can see 145 is kind of this area that we're hanging out at before we had this massive rally up. And I want to talk about one more thing. So when an important stock like Apple, which is big name in the FANG, goes below the 200-day moving average, generally, now I'm not saying all the time, generally, if it's not earnings related, it will actually go back and retest the 200-day moving average. So in my opinion, somewhere between now and the very near future, I think we're going to have a pretty solid green day because I'm anticipating Apple going back to retest the 200-day moving average. And let me just show you some examples of this. So we're going to go on Google, and we're going to find where Google first broke underneath the 200-day moving average. So you can see this happened right here, and this was before earnings. And then actual earnings was on the first. You can see we retested the 200-day moving average before we actually hit the earnings date. And then you can see we fell underneath it again, and then we almost came back up to retest it. So you can see once an important stock like Google or Apple breaks underneath the 200-day moving average, generally it's going to want to try and retest it. And we could see how true this is again. We could look up Amazon. So Amazon actually broke underneath the 200-day many times because eventually Amazon kind of caught up to price action. So we're going to look at when the Amazon first broke under. So we can see this goes all the way back to 2021. When we broke under, in a matter of days, so let's see, that's the third right there. In a week's time, we basically came back and retested it. Then we retested it again and again and again. Eventually we had a breakout, broke underneath it, retested, and we broke underneath it again here, retested, again, retested. So you can see, generally when an important FANG stock breaks underneath the 200-day, it wants to retest. Now let's see if this is true for Facebook. All right. So Facebook broke underneath the 200-day, most notably right around here. So that's early December of 2021. And also again here in October of 2021. So you can see when we broke underneath and we closed underneath, we quickly rallied back up. See it happened again, quickly rallied back up. And it wasn't until earnings that we just completely fell below that. So my rule is if it's not earnings related, if it's a FANG company and it falls underneath the 200-day moving average, generally it's going to want to retest that 200-day moving average. It's not always true, but I mean, I'm seeing it quite a bit. We can see if this is true with Netflix too. So let's see where they first broke under. Right, so that's the pandemic crash. So we're going to go right here. Now you can see this is in between two earnings dates. So in between two earnings dates, we had this close that was basically right there at the 200-day, ever so slightly above. And you can see, we came back above it. Even when we crashed underneath on an earnings date, we still came back above it. So this 200-day moving average is pretty strong. And then we came underneath it again, and you can see we're messing around. So it's not just one and done, it just goes underneath it and it never goes back again. Usually when FANG stock goes underneath the 200-day moving average, it's going to want to come back up and try and retest several times before eventually a bigger event, like an earnings, will take it a far distance below the 200-day. So here, now we're so far below the 200-day. I mean, that's like a $200 move. So now it's going to take a while to probably close this distance here. But I mean, we do have some gaps in the chart. So here you can see we've got a gap around 464. Another one right here, a little over 500. And if this is your first time hearing about gaps, I have a video, I'm going to link it down below. I'll kind of teach you a little bit about gaps. So here I'm talking about it a little bit, but in that video I give you more depth. So let's look at, let's just look at one more name here. Let's see, what's a good one? Let's look at NVIDIA. All right, so go to the 1 year. You can see we had this movement around the 200-day, but I don't think we actually closed underneath it. So yeah, right here we did close underneath it. And then notice how shortly after we broke the 200-day, we tried to come back up and retest. And then, you could see either a reject or a sharp rally. So you'll see one of those two things. But here we saw a reject basically. And it came very, very close. Not quite. So I think we could see the same thing with Apple, Right now we see Apple is ever so slightly below. Maybe we could just fall a little bit and then you'll see that retest of the 200-day moving average again. So definitely look out for that on Apple. And now we're going to look at the QQQ, which basically follows the NASDAQ here. So the one thing that's a little bit concerning to me is that here we're on selling volume, and I think we're actually below. Yeah, we closed below this February 24th. So just a few cents. But there weren't any buyers here like last time. Now this is like a barren wasteland. Nobody really wants to buy here. So what do I think is going to happen? I happen to think that we're just going to fall a little bit more. Like, if I'm looking at this trend channel right here, I'm thinking it's pretty potential we could fall another $10 or so, right around 307-ish, 308. and then we could see that rally. And the upper side of this trend will probably be around 336. So we'll see. I mean, right here, I mean, I'm not really seeing any buyers stepping in. And I do want to point out that this selling isn't really on that much volume here. So let's look at the volume statistics. So right here, we just had about 79 million in volume. The average is 77.35, so it's not slightly above average. And if we look at SPY, let's take a look at the volume. It's only 95.23 million, when the average is 113.18 million. So today we're selling on pretty low volume. And we could see right here that, they've been doing this quite a bit. They did this on Friday too, where they gap things up in the morning, peace talks, whatever, and then they just slowly tank it down throughout the day. I'm going to go on the 5-day. You can see exactly what I mean. I mean, we had this massive rally here. Now, whoever picked up a short here is doing pretty amazing. Sadly, I didn't catch that. I was, what was I doing? I think I was at school or something. So yeah, I didn't really catch that. But yeah, a little sad about that. And you can see, let's just zoom out a little bit more. All right. So you can see right here on this smaller time frame, we have this head and shoulders. So I do think we could just close out this smaller head and shoulders. So that'll take us right to around like 414. I think it'll happen. And then we'll see if we want to go down to 410. And then if we're looking at the bottom of this trend channel, that's around 400. So who knows what's going to happen? I mean, right now the talking heads are saying, well, we're going to sell the rumor for the FOMC, and then we're going to buy the actual facts, is what they're saying. So who knows if that's true? But I do think that we're pretty close to seeing an end to the selling, because I do think at some point here we're going to have to fill some gaps. So I do want to point out some gaps. There's one right here. I don't know if you can see that. But yeah, we have this gap. It goes to around, let's see, that's like 35. So we have this gap here at 35 that hasn't been filled yet, if you could see that. And let's see, what else? Yeah, I think that's the most obvious one right there. That gap right there at 35. So we'll see if that wants to get filled. So that would be like the bullish thing for this gap to get filled. But let's see, the top of this channel right here happens to be around 32. So, that might be, if we do rally, that might just be a good area to trim a little bit. If you have calls or whatever, I would trim some calls at the top of this trend channel. And then if we get above, I would definitely want to trim some calls at this double top potential right here at 440. And then, if we go above 440, then I think that there's a good chance that we could get out of this correction. And then we could maybe just move sideways for a bit. But my biggest worry for the S&P 500 is definitely going to come around earnings. So mid-April, we have probably going to have like the hottest CPI here in mid-April. And we're also going to have Netflix earnings. Usually comes out mid-April. And it's always the first earnings report that's going to scare the markets, So if Netflix comes in bad, then there's going to be like a lot of selling going on. And we're definitely going to see a lot of pain in the markets. So if we do see a sweet spot in the markets, I think it's going to be sometime after the FOMC and before CPI for April. And after that, I'm really unsure of what's going to happen. So In my personal opinion, this is just an opinion and just kind of like a prediction. I happen to think we're going to rally back up. We're going to fill that gap. We're going to do something like a double top right here. Maybe we go all the way back up here to 460, and then come earnings in April, I think we're going to fade again. So that's just my opinion. Take it with a big grain of salt because I happen to think I'm wrong also. So that's my opinion on SPY. And let's see, is there anything else I want to cover? Yeah, so let's cover XLE too, or XLF. So the financial sector actually did pretty decent today. We didn't have a red day. The rest of the market was just bleeding, bleeding, bleeding. XLF was doing just fine. I mean, we actually went up 1.26%. But this isn't anything crazy bullish because look, I zoom out. We're still below this trend channel. We're still below the 200-day moving average. We have the 20-day moving average basically knifing underneath the 200, and it's going to cross underneath the 250 as well. So nothing too bullish. Maybe, if you're going to short, maybe like right here will be a good opportunity right at the 250-day. And then see how that goes for you. And if it looks like we're going to close above, then, obviously you would get out. So that's just an idea right there. And let's look at XLE. XLE actually fell today, down 3%. So where do I think that this could potentially go? Now maybe we could fade all the way back down here to the 20-day moving average right here at 71.68. Other than that, it's still pretty bullish. We could even go down. Let me just take out the moving averages here. There's a chance we could go all the way down to this trend line right here. So that would be right around 67. That's possible. And then lastly, I want to point out all these commodities. So this is the real-time commodity future. You can see it's a sea of red here, sea of red. Crude oil is down quite a bit. It was down 6.7%. Palladium is down an insane amount, 15%. Got heating oil down. Brent is just ever so slightly up, but it's still down quite a bit from where it was about a week ago. I think these went over 120. So it's down quite a bit. So if I'm being honest, I'm actually more bullish this week than I was last week. I mean, last week we were worried about CPI. We had all these commodities going crazy. Now we're seeing a sell-off in these commodities. I mean, is this just a break? Is it just cooling down a little bit before it rallies up again? Or are they seriously selling these commodities? And retail is probably getting trapped here. They're probably selling out in droves. So to me, this is actually more bullish than last week. So we'll keep an eye on the commodities. I mean, if crude goes under 100, then that'll definitely be looking a little bit more bearish or bullish for us in the stock market here. And lastly, if you don't really know what to do in a market like this, then maybe you should just buy some ETFs. And in my other videos, I talk about why you should buy ETFs. I talk about some different ETFs you should buy and how different people have different needs for different ETFs. So I'll link that down below. And I hope you guys have a great day and stay safe out there.